Good morning, everybody. Welcome back to another Market Open. It is November 29th, 2023, 8:46 a.m., and we are back with another Market Open. Folks, we've got a green market. So today is one of those days where someone makes some money and see if this green continues to be as green as it seems to be in the pre-market. So we got a lot to talk about in terms of the green market that we have. Thank you all for joining. On top of that, we do have some sad news as well. Investing legend Charlie Munger passed away yesterday at a California hospital at age 99. So I also do want to talk about Charlie Munger, a little bit on his legacy and the fact that he passed away, which was something that I think a lot of people knew was eventually going to happen, given his age was getting up there. But you know, it's kind of like when you live for that long, you don't really expect it to be real when it does happen, and then it does happen, and you have to come to grips with the finite nature of existence, and that all of us are mortal, and it will eventually happen to all of us. It's just the fact that he was able to be as sharp as he was, you know, still running Berkshire, still working on investments, still doing due diligence, still publicly talking in interviews at 99. Not an easy thing to do. So definitely rest in peace to Charlie Munger. We will be talking about him a little bit later. And we're going to be talking about this market that we in. A couple of headlines I want to go through. Amazon launching a new competitor to Palantir. This is going to be a very interesting thing going on with Palantir. Amazon announcing Amazon Q. We're going to be talking about what that is, what that means for Palantir. Palantir right now breaks $20 in the pre-market, up 1.73%, and a lot of companies doing well in the pre-market. Tesla at $250, SoFi at $746, Uber at $56, Snowflake, they have earnings today at $175. We are seeing a green market. I think we are in the beginning, if not in the very middle of that Santa Claus rally. So a lot to discuss there. And then on top of that, we really have to discuss the new things that are going on in the macro. The 10-year got down to 4.2 today, which is something we have not seen really in like 3 months. We were at 5% just 1 month ago. So we got a lot to discuss, a lot to talk about. There's a lot of potential money to be made. That dumb stock I bought yesterday, BitFi, it's up another 20% in the pre-market, because why not? Of course it would be. So we got a lot to talk about. Let's get into it. Jocelyn, Victor, Vesco's, Brando, Joe Rice, thank you all for being here. Trucker Rob, Alex, Jonah Anderson, Sethi Roth, Ty Gordon, Monty, Miss Yiger, David, Cyber Shadow, Monty, Jared, Brad, Sasky, Garcia, Tobor, Jittery Hobo. I forgot the name, Jittery Hobo. Thank you for being here. Imnop, Garcia, Troy, Blake Anderson, Jager, Jason, John, CW, Ricardo, Garcia. Kelly says, good morning. Hi, salutations. Good morning to you, Kelly. You said my hair looks good. Thank you. I appreciate the compliment. Miami Ren, Lord, Auntie, Dan. All right. So we've got a lot to discuss. I think let's start off with macro. Let's start off with macro. Then we're going to do a little bit on Charlie Munger, and then we'll get to Palantir. So this is a very exciting market that we are heading into right now. And the reason it's such an exciting market we're heading into, at least for now, is because we are at that moment where things are colliding in the exact way you need them to collide. It's one of those things where things start just becoming perfect, right? The things that need to happen start intersecting with the things that need to happen. It's kind of like, you know, when you're on a first date and like everything's going right, you're doing what you need to do, the conversation's good, the vibe is good, you're just like, you know, I think things are going well. What we're having right now with the market is a perfect date. And quite frankly, the reason for that is because of bond yields starting to come down, the 10-year being the biggest that I'm sharing right now. And this is the second part, oil also starting to come down to the point where the market's getting excited for disinflation. So we see the 10-year right now at 4.319. About 30 minutes ago, the 10-year was at 4.29. And just the idea that it gets down to that 4.2 level, I think was really exciting for the markets. And that's why we saw some of the pre-market action that we saw right now. S&P 500 is 457 on the index. We are 2 points away from not all-time highs, 52-week highs on the S&P, which was 459. Right now we're at 457.8. 0.08, up 0.48% in the pre-market. So this 10-year continuing to come down just means more money potentially entering into the equity markets, because now investors get excited that because that 10-year is coming down, interest rates are going to be coming down. And if interest rates are going to be coming down, well, the market's going to be really excited. Now, the question is, why are interest rates likely going to be coming down? And this is where we had someone really exciting talk yesterday. His name is Bill Ackman, about why the Fed is going to cut rates sooner than expected. Remember, Bill Ackman covered his short on bonds about 3 weeks ago because he felt that the economy was slowing down. If the economy was slowing down, that means there's going to be some cracks in the economy, and some cracks in the economy because the economy is slowing down, unemployment going up, means the Fed's going to have to cut rates. Now, the question becomes, was the Fed going to cut rates in May or June, or was it going to get bumped up to March? And about 90% of analysts 3 months ago thought May or June was the earliest, if that, we were going to get a Fed cut. And this is why the economy and the stock market and everything about it is so incredibly interesting, because within a couple of months, the entire narrative changes, which is really what we're seeing in the fintech space as well. We're going to talk about that in a couple of minutes. The entire narrative has changed. Yesterday was a fantastic day for fintech after the morning open ended, where now the Fed believes, or most analysts believe, no, the Fed's going to cut, and they're going to cut way sooner than expected, which means money's going to have to go into equities if the Fed does cut. Let's hear Bill Ackman talk for a couple minutes, and then we'll get deeper into why some of these interest rates are probably going to be cutting soon.
It's just the United States, in some circles, that we probably have avoided a recession for the near future. We're going to have a so-called soft landing. That's the consensus. Is that your view as well?
I think it's really hard to predict. I do think the economy is weakening. We're seeing, evidence of that in some of our companies. You're seeing, I have some concerns. There's been a huge subsidy in terms of low interest rates, and most companies fix their rates or their debt at very low rates, and certainly real estate investors did the same. And that works until it doesn't work. And so I think what's going to be interesting is to see what happens when people have to reprice their debt. And I think that can have sort of a cliff-like effect. And you're certainly seeing that in real estate.
Now, the markets are assuming, and the markets are not always right, but the markets are assuming that there's going to be a Fed discount cut sometime next year. Now, as we talk now, just about the end of November, it's not clear what the Fed will do, but some people say that the Fed, if they were to cut interest rates next year, would help the Democrats and therefore be seen as very political. On the other hand, some people say the Fed can't wait till after the election because the economy might need a stimulus. So you have a view on what the Fed's likely to do?
I think they're going to cut rates, and I think they're going to cut rates sooner than people expect, because what's happening is
Bill Ackman sounds very confident about this. You see how he said it? There's no hesitation in his voice. He thinks the Fed is cutting those damn rates.
The real rate of interest, ultimately, which is what impacts the economy, keeps increasing as inflation declines, right? So if the Fed keeps rates in the sort of middle fives, and inflation is trending below 3%, or that's a very high real rate of interest. And I think that is having a sort of retarding effect on the economy. And then, of course, again, many businesses and certainly many individuals have the benefit of fixed rate debt. And that fixed rate debt, certainly for companies and for commercial real estate, starts to roll off. So I think there's a risk of a hard landing if the Fed doesn't start cutting rates, pretty soon. So, I think the market expects sometime middle of next year. I think it's more likely probably as early as Q1.
Now, this is really interesting. To break down what Ackman's saying here, his argument is that there are economic indicators going on in the stock market, right? Not just the stock market, but the economy writ large, that is indicating that something can break. And this whole idea of, are we going to get a soft landing or a hard landing? His argument is that a hard landing is going to come unless we cut rates sooner than expected because of different things that are slowing down. I mean, so far, we're already seeing a little bit of the housing market act very interesting. Mortgage rates were at 8.1% a month ago. Now they're at 7.37%. So we're not getting above that 8.1%, which is really good for people that are trying to buy a house. But that also means that prices are going to start coming down on these houses. These Zillow fantasy prices we're seeing in this la la land of like $5 million for a house that has like one bathroom, that's probably not going to happen anymore. And if that's going to come down, that means there's going to be a little bit more of a chilling effect in the housing sector. And that's just one of the things that's going to potentially start to create some potential slowdown in the economy. On top of that, shelter, which we've talked about for a long time on this market open, has a lagging effect. And when we see the effects of that on either November's CPI or December's CPI, we are going to see a two-handle on inflation, not to mention everything going on with oil, which we'll talk about in a little bit as well. That's affecting inflation, and we'll get CPI to come down. If that is the case, and you got unemployment steadily going higher and higher, this whole idea of the consumer being the core thing that is resilient to the economy, it can last. But the question is, how long is that going to last? How long is the consumer going to be resilient until the Fed has to make a decision? And Bill Ackman's bet is that sooner versus later, the Fed will make a decision, and that decision will encompass cutting these rates. And that's why I think we're seeing Santa Claus come to town. 457 on the S&P. I can't find a single red stock in Nvidia's green right now, 483. I don't see anything. Alibaba's red, but that, China. Other than that, everything's green. Microsoft hit a new a new, not 52-week high, all-time high in the pre-markets. Like, this is just incredible. This is absolutely insane. You got Apple at 190, even Google's doing well, and Google's been stuck for a while. Google now at 139. Obviously Bitcoin at 38,000. So we're seeing a lot of market momentum. And the reason for this market momentum is because, again, there's so much money on the sidelines, whether it's in money market funds or high yield saving accounts, that eventually that's going to have to start to come back into equities or into crypto, but probably more equities, because if you have your money in a money market fund, I would imagine you want to be a little bit more safer. And so equities are probably a little bit more safer than crypto. And that money's going to come into the stock market. And the question is when that money is going to come in. But when it does come in, it's going to be incredibly excited. Phoenix says, hey, mate, what website do you use for stock tracking? I use Webull and Robinhood. Webull and Robinhood, both are free. So you can download those pieces of software and or apps on your phone, and they work really well. We got the Rit Large counter, bullish on Rit. Every time you guys got to put in the chat. Every time you hear it, I'm not even trying to do it. It just comes out. The Rit Large counter is there. FR3, hello everyone. Thank you for being here. C Bisco says it's very hard to get excited. I started investing in April and I'm up 13%, but in a day or two I will be back down 8 and 9%. Am I wrong? Really, it depends on what you invested in, right? I mean, if you invested in, for example, GameStop at the highs, you might have been up for a little bit and then you were down dramatically. GameStop is up 30%, by the way, in the past 2 days. So I think we are so back, and hopefully we are back in a way that doesn't allow GameStop or AMC to go to the moon, because you don't want a lot of meme shit going to the moon, because it creates so much instability because you don't know when to sell, right? What if GameStop does go back to 300 and it's like you don't know where the top is. I would love to see GameStop and AMC not go to the moon and see regular companies go to the moon, like that deserve to go to the moon. But just seeing them be back up 30% in a day, I mean, it's up 13%. The pre-market was up 13% yesterday, so 26%. We're seeing some more momentum. So again, this really comes down to what you invested in. You could be back down 8 or 9%, but if the market keeps moving, honestly, you can invest in stuff like GameStop and things can go up. It feels very reminiscent to 2020 when every single day things were green. Now, I don't know if we're in a 2020 type of cycle because interest rates are still high, but we are in this kind of relief rally that is going on in a Goldilocks period before the Fed cuts and when money wants to get in before the Fed cuts. So even if it only lasts for 5-6 months, there is money to be made, even if it's not a 2020 type of scenario once again. So that is what we're seeing a lot in the pre-market. A couple of other things I want to talk about before we go to Palantir. GM is up 9% in the pre-market. This was a big one that I saw. Why is GM up right now 9% in the pre-market? Well, GM basically said, hey, shareholders, we're going to get on our knees and do whatever you need to buy the stock. And as a result of that, they issued a $10 billion buyback. So you got $10 billion. Higher dividend. They're like, you know what? We're going to give you even more money to own the stock. And they're maintaining their 2023 guidance after the auto worker strike that is now pretty much come to an end. And as a result of that, they have a ton of money to be able to work. I think GM did $3 billion in net income last quarter, if I'm not wrong. Correct me if I'm wrong with that, but like, this is a company that's very, very profitable, which is why the auto workers were striking, right? They wanted a really good deal. But GM, the growth necessarily isn't there, but investors still like it because of the dividend and the fact that they're a stable business. So as a result of that, they're doing everything instead of innovating in EVs and technology like Tesla to make sure investors stay happy, which is what you expect from a legacy auto company. They're going to make sure the dividend is there. They make sure they buy back stock. They're probably not going to innovate to set them up for the next 20, 30 years of growth. But at least right now, Mari Barra can get people to buy the stock and she can say that her job is done. So that's another headline we saw with GM doing what they needed to do this morning to keep it going. So that's a lot of the stuff going on in the macro. We'll talk about oil in a second. Quick look at the charts. Palantir, $20 in the pre-market. Nvidia, $483. Amazon, $148. Tesla, $249. By the way, I did purchase some Tesla yesterday. That made some news on Twitter. I didn't know people would be that crazy over it. I said 2 words. I bought Tesla. And Twitter was like, we're going to show this to everyone on the platform that likes Tesla. And everyone had something to say. I bought 5 shares yesterday. You guys saw me. The goal is to get it to about 50 shares, which would be close to a $10, $11, $12,000 position based on when I buy it at. First buy was at $235. Stock's at $249. I'm not saying I'm the reason the stock is up $15, but let's just say I'm the reason the stock is up $15. And so I'm really enjoying my Tesla gains because it feels nice to buy at the low, and when the stock goes up, it's it feels nice for that to happen. So we're seeing that happen in the pre-markets. Let's talk about Charlie Munger, and then we're going to go to the Amazon Palantir competitor. I just wanted to show one video. It's 3 minutes, and this is Josh Brown. He's an analyst on CNBC that I actually really respect. Here's him talking about why Munger is one of the biggest investing legends. We spent a lot of time talking about this on Finance Junkies last night, but I do think we should talk about it right here for a couple minutes. Obviously, someone dying at 99, you kind of like, you feel bad that they've passed, but you also recognize the longevity of life they've had. And with someone like Munger, who's just had an astronomical influence, the almanac of Munger, into that book that just has all of his best life sayings. The biggest thing I heard yesterday when I was getting some coverage on this is that his advice was not about investing. It was about life. It's just that the advice was so good, it was inextricably attached to investing, because of how he correlated all these different topics. And, that's why I think a lot of people respected him. And I don't think we're going to have someone like him again. Here's 3 minutes on Munger, and then we'll move on.
Josh Brown, he's the CEO and co-founder of Ritholtz Wealth Management, obviously a CNBC contributor. Josh, we appreciate you coming on last call. I know it's been a long day for you. Your thoughts on Charlie Munger? I mean, amazing guy.
So I love the witticisms that you just played, and I've got a signed copy of Poor Charlie's Almanac on my desk. But I think the thing that we should probably close out tonight with, Brian, is to just talk about how instrumental he was in the success at Berkshire Hathaway. To refer to him merely as vice chair would be to significantly downplay his true contribution. Prior to Warren Buffett meeting Charlie Munger at a party in 1959, Warren's main investment strategy was something that he learned from Ben Graham, which was cigar butt style investing. He would basically be looking for dirt cheap prices, even if a company didn't have a long runway, to get that last puff of the cigar. It's Charlie Munger who convinced him it was time to change course. And rather than try to buy good businesses at a fair valuation, buy wonderful businesses instead, even if you have to pay up a little bit. And that's where you get Coca-Cola, and you get some of the big winners, American Express, Apple, a more recent example, probably their biggest success story ever in the equity portfolio. That's right. Charlie was on the board of Costco. And so that mentality, that shift that Warren Buffett wholly credits Charlie Munger for is, I think, the thing that every investor should understand, respect, learn the history of, because had it not happened, Warren Buffett probably ends up like a lot of other value investors from the 1960s in obscurity, where none of us ever hear about them again.
It's amazing.
And I think that was the big point, because Warren Buffett, again, he is not the guy investing in the Teslas and the Googles and Amazons of the world. He stayed slow and steady, and you needed him to stay slow and steady as a value investor and be successful. You kind of needed the Munger, the yin to his yang, to really be able to get that to ultimately perform against all of the big tech companies that were performing as well. One story I want to share from this that I heard yesterday is that in the NASDAQ during 2001, at the height of the bubble, Berkshire shares were at the lowest they have ever been. Let me say that again. That's really interesting. Berkshire shares were at the lowest they ever were at the height of the 2001 bubble, the tech bubble, because obviously the internet was taking over the world. And all the shareholders at that first meeting, or at that 2001 meeting, were like, how could you have missed this? This is like the biggest revolution of all time. How could you have possibly missed this? They were really doubting Buffett and Munger's approach. But Buffett and Munger, because they didn't really care about innovations that they necessarily couldn't understand, which is all that matters. It doesn't matter if the innovation was real or not. Did they understand it or not? Because the understanding of the innovation or hypothetical innovation would inform the investment thesis. And if they didn't understand Pets.com going public, that's why they didn't invest in it. Whereas you have a lot of people that didn't understand Pets.com going public, but they understood, quote unquote, the internet. So they invested in Pets.com and they lost all their money. So at that meeting, they were just like, hey, this is a bubble and we're not really stressing it. And I think that's the biggest lesson I take away from that. I mean, I'll see a stock go up right now in Webull and I'll be like, oh man, I wish I invested in that. And like, that's my immaturity, because I'm just like wishing I was in that stock because it went up. Whereas in reality, if I don't know anything about that stock, like I should not be investing in that just because it goes up. And I think that level of patience and maturity, because eventually the bubble popped and Berkshire was absolutely vindicated for picking the right companies when all that growth switched to value in the early 2000s. It just proves that having a real investment thesis, a real understanding of how we should approach the capital markets, is the right way to ultimately do this. Adam, thank you for being in the chat. Good morning to you as well. So from that perspective, I do think that Charlie Munger has left an incredible legacy, and he will be remembered for a very long time. And I can only imagine what Warren Buffett feels today. They were best friends for the past 50 years. So rest in peace to Charlie Munger. Let's move on to Palantir. I've got some big news on Palantir today, folks. Lots of big stuff to talk about. Amazon is coming for Palantir's lunch. And I'm not exaggerating about that. They have released a product called Amazon Q. And the nature of this product is going to be essentially creating what Palantir's AIP is within AWS. So for people that don't really understand AWS, it's not just like compute, right? It's not just like cloud computing. It is like hundreds and hundreds of different microservices that are attached to make an enterprise more effective, make their backend better. There's just a lot of stuff going on. So AWS, that prints $62 billion of revenue per year. It is the number one cloud computing platform in the world. Obviously has tried to innovate and bring other features to the enterprise, because when you have, let's say, I don't know, 5,000, 6,000 enterprise clients, you can upsell them on a lot of different things. Palantir has 453 clients compared to, some of the hyperscalers. As a result of that, Amazon's like, you know what? These chatbots, this whole AI thing, it's getting kind of exciting. Maybe we can offer an enterprise product. So here's a clip of AWS CEO, 1-minute clip of him talking yesterday about this. And then I want to talk about the implications of what this means for Palantir.
Customers that have been previewing Q in private are incredibly excited about it. And we think it's going to be transformative in helping to reinvent how people work. The existing chatbots or generative AI assistants are great for consumers. And so many of us, of course, have used them, experiment with them. But unfortunately, for the most part, they don't really work at work. They don't really know who you are. They don't really have access to your repositories. And for the most part, they've lacked security and privacy characteristics that are pretty much requirements for enterprises and many other companies. So Amazon Q is going to be tailored and customized to your business. We've built connectors to over 40 major systems, including Microsoft 365, including Google systems, including Sales.
So these guys are trying to come for everybody's lunch. Johnny says, wow, I admire the Amazon disruption strategy until it hits close to home. I'm going to play a video. I'm going to be talking over it, so there's no sound here. But this is what the product looks like, okay? So this is Amazon Q. It looks very similar to, as you can see, a chatbot for an enterprise. The whole point is that it's trained on customer data that's specific. It's proprietary to the enterprise. It's confidential. There's guardrails. There's guidance. There's governance. There's all that sweet, sweet, juicy stuff we love about AIP built into Amazon Q. And that is why, I brought it up as a potential competitor to Palantir's AIP. Now, here's my overall thoughts on this and what this means for Palantir. I am really not worried about it in the sense of, I think Palantir is offering an entire operating system for the enterprise with Foundry and AIP. And I think those two things scale in a fundamentally different way than just integrating some type of Amazon assistant within AWS. Now, where Amazon does have a moat here is obviously if you have AWS and you integrate Amazon's Q that's already integrated with AWS, you don't have to hook up disparate platforms within each other. You just have one platform that's working within the platform that it's built on, AWS and Amazon Q. And there's a very synchronistic, symbiotic relationship for allowing the end user to be able to get the data that they need. The problem is if it's actually going to produce the results that the end user wants in regards to getting AI-oriented answers. So the reason Palantir's AIP, in my opinion, has a moat is because what they're doing in terms of the connection between the ontology that's grounding the semantic understanding of generative AI within actual contextual reality of an organization is something very difficult to do. Palantir has thousands of patents on this, and it took them 20 years to build this type of a program. And number two is the actual guardrails, governance, and security. It's not saying that AWS is not going to be secure, not going to have governance, but is it going to be at the sophistication and at the level at which a Palantir software is? On top of that, this whole approach of KLLMs, we've been talking about the fact that LLMs are a commodity. These large language models truly mean nothing. What makes a large language model special, and I've been playing with these LLMs over the past couple of weeks, so I've started to get some hands-on experience with them, is the data they're trained on and the ability for them to synthesize results in a multitude of ways, or synthesize user queries in a multitude of ways to be able to give the right results. That is what ultimately makes up, to me, a defining product. Now, the bear case for Palantir is that Amazon is distribution. So everything I said really doesn't matter if Amazon can go to their 1,000 clients and be like, oh, Palantir's offering you this, we'll give it to you for 50% off. Because then it goes down to a bottom line of a CEO and they're just like, like 50% off is a really good deal. Fuck it, let's buy, right? Because at the end of the day, Amazon's not trying to make money off this. They're trying to make money off compute. And if they can sell you more compute by giving you more features for free, it's very simple, right? To be able to land these deals. This is why the bootcamp strategy is that important. For anyone that was doubting Palantir's go-to-market strategy, that bootcamp strategy is so important. I mean, if they did not have the ability to literally be in front of people and give them working proof of concepts of actual products that they can use on their own data, it's just, I don't see them competing with Microsoft and Amazon from a Salesforce perspective. Like, they're not going to beat the guy at Amazon who makes $300,000 a year, who calls 17,000 people a day. You're just not going to beat that sales guy. It's just not happening. So you need something better. Product is better, which means you need the ability for the bootcamp to showcase the product in order to be able to get the customer acquisition. On top of that, obviously, Palantir's government business, I think, is going to grow, which will offset some of the commercial clients they may use. But this is something to look into. It's not that Amazon's taking their lunch or Microsoft's going to, ruin Palantir. It's that this space is getting very competitive. This space is getting a lot of players that are coming in. AI really is going to be monetized in the enterprise. It's not going to be monetized for the consumer, at least not yet. $20 a month for ChatGPT is not what Microsoft is excited about. What they're excited about is getting a $100 million client over the next 5 years because they're offering more Azure AI credits. They're offering more AI-enabled services. So we will see, what ends up happening. But this is something to definitely think about when it comes to Microsoft and when it comes to Amazon and when it comes to Palantir. On top of that, we got Rishi Sunak. Palantir obviously just got the NHS deal. Rishi Sunak was at the I don't even know what you call it. This is like their parliament or whatever in England. And some lady was yelling about Palantir getting too much money from the British government. And Rishi Sunak got to respond to her and say, hey, this is going to be okay. Here we go.
Mr. Speaker, NHS England has awarded £330 million to Palantir, a controversial technology firm, to help it recover from its pandemic backlog, despite deep concerns among many healthcare professionals about privacy, ethics, and the safety of patient data. In light of the government's recently commissioned report on unifying health data in the UK, can the Prime Minister confirm that no attempts will be made to force the Scottish Government to release the personal data of Scottish residents to any centralised system?
Mr. Speaker, as the Honourable Lady knows, healthcare is devolved, but we will look for every opportunity to improve patient care and reduce waiting lists in England. And that's what we're doing, developing new technology, which has had a proven track record in bringing down waiting lists and improving the optimization efficiency of how theatres are scheduled. That's the type of thing that we need to do to ensure patients get the care they need and we can get efficiency in the NHS.
I think he killed it. I mean, I think I would have been a little bit more aggressive, quite frankly, with my response. I would have been like, hey, why are you such a fucking idiot? But instead of saying that, he was a little bit more respectful. Look, at the end of the day, like, Palantir got the deal. So a lot of this doesn't matter anymore. Palantir got the deal. The deal is done. It is secured. Money is in the bank. Maybe not in the bank fully. Maybe they have to like reach some milestones to get the money, but you get what I'm saying. They got the deal. And I think when those results start coming out, those results being wait times have gone down, which is what Rishi is saying. He's like, look, we've piloted this shit. It's worked. You guys elected me to be the prime minister for a reason. Can you please let me govern and make some decisions, right? Like, you got to give the prime minister, the president, at least a couple years to enact their agenda. If you have a democracy and the democracy votes for somebody, 51-49, whatever it is, you got to give them a little bit of time. And usually, I mean, this in the United States, if you have the all three branches of Congress in alignment, House, Senate, and executive, then you can pass some policies, right? And so I think Rishi's just trying to be like, look, give me a shot. I know it's controversial, but let me prove that it works. Stop thinking that just because Peter Thiel supports Trump, that this company is going to steal your data, because that's the dumbest thing I've ever heard in my entire life. That's probably what Rishi's thinking. And if it works and I get to transform the legacy of the NHS forever, not just for the next 5 years, forever, because we actually build it into a reasonable system, then, you guys are going to be thanking me. So I think that's his argument. I would have said that, but, he's a little bit more politically correct than me. And so he's just trying to, get the point out the best he can. You guys, some of you guys like the impression, some of you don't. Troy says, please do the impression. Kelly says, please stop attempting accents. I think my British accent is okay. My Australian accent sucks because my Australian accent just ends up sounding like my British accent. So there's no difference in it. So when I say it to an Australian, it's just, they're like, that's not good. I can say mate, but like even mate sounds British, so it's not even that good. The UK's first response to AI was to regulate. Typical. Yeah. And look, it's not like regulation shouldn't be a topic of discussion. It's just like, dude, your NHS is broken. People have to wait weeks. It's not me saying this. It's people I've talked to, my UK subscribers. They're like, dude, it sucks. Like, we love that it's free, even though technically our taxes are paying for it, right? So it's not really free, but it sucks. Like, we would do anything to make it a little bit better. And, Palantir is trying to make it a little bit better. So for those that are just joining, what I was just discussing for the past 10 minutes is Palantir's new Amazon competitor called Amazon Q. You can go to 19 minutes and 40 seconds on the live stream if you want to get some coverage on that. I'll be talking about it more on the Palantir Daily episode today. I don't think it's the biggest competitor in the world. The problem is they have distribution, and as a result of them having distribution, it is something to think about when it comes to Palantir's go-to-market strategy with AIP. But again, I think this market is getting bigger and bigger and bigger. And because this market is getting bigger, there are a lot of opportunities for a lot of companies. If anything, here's the final point I'll say before we move on to some other equities, is this is validating the space, right? Like, this is the I know it's a simple argument, but this is if Amazon's like, hey, we want to get into enterprise level AI operational workflow chatbots for all types of parts, whether it's marketing, finance, accounting, et cetera, which is what they were showing in their video. That means that they obviously feel if Palantir is going after it, if Databricks is going after it, if Snowflake is going after it, then we as Amazon should definitely be going after it. And going after it means that pie, that total addressable market, is getting bigger and bigger and bigger as more and more people want to spend on AI-enabled services. And as a result of that pie hopefully should be benefiting Palantir because their market gets bigger. They have a better chance to capture more of that market. Sachin, thank you for being in the chat. He says, just by making any statement without putting any data, and if doing something is illegal, this is why we have a judicial system instead of opening court on social media. I agree. Sachin is talking about the clip I just played with Rishi Sunak, basically dealing with the random people in Congress. I mean, it is hilarious. Obviously, in a democracy, you have free speech, so people can say whatever they want. But it is sad that elected officials in Congress, and look, this happens in the United States as well, just blurt out anything that their beautiful, fancy little heart desires. And then they put it out there, and then the media gets to cover it, right? Because for the media, it's sensationalism. BBC is like, oh, these people are arguing with these people. Let's put it out there. And then, it becomes a thing. And it just ultimately becomes a lot of nonsense piled into your screen from the people that are supposed to be governing us. Because anyone who is saying that Palantir is stealing your data is saying nonsense. It's not like you can't bring up concerns about Palantir in regards to data privacy and ethics. That is normal. That is natural. It is after you learn from repeated levels of information that you still think they're a spy tech company with zero logic or proof. That is why it's such a big deal that Palantir got this NHS deal, because so much of the British media was against them, and Rishi Sunak was just trying to be like, you know what? That's just not the case. And unfortunately, in Congress and, in our political apparatus, that's what ends up happening. But Palantir got the deal, which is all that matters. And so, congrats to Palantir, and we'll see how they continue to fix the NHS over the next 5 years. Let's move on to some more macro stuff. So we got about 11 minutes until market open. Let's look at some different equities we have right now in the pre-market and see what's going on. Tesla 249 up 1.1%. Obviously, Tesla was up 5% yesterday. Really, really good day for Tesla. So Tesla continuing to do well. I'll go through my thesis on why I bought Tesla in a little bit because I didn't get to explain a lot of it yesterday, but I did buy some Tesla. Enphase $100 up 2% in the pre-market. Robinhood $8.86, baby. We are very close to that $9 range. I do have a good amount of money in Robinhood. I've been talking about it a lot on the stream. We were talking about it when it was under $8. We said it didn't make sense. Valuation was stupid. Look, in a bull market, Robinhood is going to benefit from increased trading activity. And on top of that, the macro is just going to take a really beaten up stock and probably give it a little bit of a premium. And I think Robinhood at 10, $11 is definitely a little bit of premium from where they're trading at. So we'll see how Robinhood performs when the market opens. CleanSpark, Bitcoin energy miner, was up 14% yesterday, now up 2.97%. The stock that I bought options on 2 days ago, Bitfarms, is up another 9% in the pre-market. My strike is 150 on the options, and I bought it at 107. It's at 146. So yesterday when the market opened, I was up $3,600 because obviously the options mispricing was stupid. And so I tried to exit and I tried to take the money and run. That was probably not going to close, so I wasn't able to exit. But let's see today where it opens, and maybe if it continues to give me more gains in a sustainable way versus in a way that disappears immediately. So we'll see what happens with Bitfarms. The reason why Bitfarms is going up is because crypto is doing well. And in a risk-on environment, a lot of these crypto companies, Bitcoin, energy miners, they're going to do well Coinbase just performing even better than expected. It's down a little bit because it had a monster day yesterday, up 7%. Coinbase now up almost 240% year to date. The sucker was at $31 in February when there were complaints about regulations. As crypto goes up, Coinbase goes up. The stuff they're doing on the on-chain part of their business that most people don't know about is something that gets investors really excited. And then, they take a transaction fee when Bitcoin gets traded. So if you buy Bitcoin at 40,000 and they take, 2%, they make more money than if you buy Bitcoin at 20,000 and they take 2%. So if you're bullish on that overarching thesis, Coinbase is obviously a great spot. Now, would I buy it right now? Up 7%, up 200% for the year? I don't know. I would be a little worried, just getting into any company that's up that much. So it's something to think about. But obviously, if you think crypto is going to continue to run, Coinbase is a proxy towards crypto. Bank of America is up. JP Morgan is up. KRE regional banks are up. PayPal also having a monster day yesterday, up 4%, 3.96%. Right now, $59.11. We need to see PayPal get to that $60 range to get a little bit of psychological movement back into the stock. I think it fell almost to $49 over the past couple of weeks, so we were just at that $50 level. Did we get to 49 on PayPal? What's the 52-week low? Did we get? I don't think we got there. 50.25. Okay, so we were 25 cents away from that $49 level. So if PayPal can continue to do well, then we're going to see momentum there as well. Sachin says it's a third green day. S&P should be prepared for a small pullback that happens after 3-4 days of euphoria. That's fair. In the pre-market right now, S&P is continuing to rally. So S&P did fall yesterday a little bit at 453. Right now at 457 right now. It ended the day 454 yesterday. So it was up 0.10%, basically flat. Right now up 0.48%. So we'll see if that rally can continue as well. Bay says Bitfarms is a $300 million market cap. No thanks. Yeah, again, to me, it was legitimately a gamble. I'm not going to sugarcoat that. It was absolutely a gamble. But I mean, it's funny because it went up. So, I mean, we'll see if I don't want to hold this till 2026, but like part of me is like, yo, let me just sell it and take the $600-700 I made. The other part of me is like, dude, I have 2 years. And if I think Bitcoin's going to be 40 grand, which is $2,000 away from 38 grand in 2026, which I could be wrong, by the way, because if you said that in 2020, Bitcoin went down to 19,000 when it was at, 30,000, it's definitely not going to be, it's going to be 35 grand, right? That's 5 grand. But then it dropped to 19 because the market crashed in 2022. So you never know what could happen. And that's why it's only $1,300 of a gamble. But if I do think Bitcoin is going to do well, maybe till 2026, the options will really print. I mean, it's already near my strike. But I could be wrong. The whole thing could collapse. So we'll see what happens. Lilium as well. This is a company. This was a previous Palantir SPAC. Lilium, Palantir does not have a position in this company anymore. They sold out of it as per their latest 13F. This is a eVTOL jet company. I also have $2 calls on Lilium. I threw in $84 5 months ago into these. I just had something left in my balance, so I just threw it in here. So it would be really funny if Lilium gets to $2 because they're expiring in March. So that would be hilarious if that happens. But Lilium, company I like, not enough to really invest in them because I don't really care about electric airplanes that much or electric jets. But it is a company I was interested in when Palantir was invested in them. Now Palantir is not invested, so it's not as exciting as it was before. Enphase again up 2%. Robinhood up 2%. What else do we have going on? AMC is up 4%. And I think the reason AMC is up 4% is GameStop. Someone in the comments mentioned that one of the reasons GameStop is up 30%, 27% in the past 2 days, is because they're approaching profitability. And that could be a potential reason that the markets are getting excited. Maybe not the market, but retail traders are getting excited. And maybe they think institutional investors will be excited as a result of that. I would not touch GameStop. Very scary to touch GameStop, just given the legacy of it, the history of it. There are definitely people that are betting high on GameStop. I mean, their volume yesterday was, I don't see yesterday's volume, but so far in the pre-market, it's about 1 million in terms of volume, 870,000. So, average volume is 3 million. So still 3 million people are trading this company every day, right? And so there are people that are still excited, still interested. And if it gets that momentum, we will see that go higher. Palantir's average volume is 59 million every day. So even though people are excited about GameStop, there's 20x more people excited about Palantir. Palantir right now, $19.99, and the pre-market's falling just under $20. Look, Palantir at $20. I have said on the live stream, I do think if you look at some of the multiples, it's getting a bit extended because the growth is not there to justify it. And I think we've had the run up on Palantir that is justified. We've had an extended rally, right? Which is great. The only thing is, if the market continues to moon and there are buyers ready to be able to buy, we obviously saw insiders dump a lot of their shares because they just felt that prices ran up too high and, they wanted to take some profits. there might be people willing to buy up Palantir even at these levels, even after a 215% year-to-date run. Because if the market continues to go up, then algorithms are trading it, people are trading it. Palantir is obviously a very fun name, and so the downside is tough, but the upside is really beautiful, because when you have a fun name, people get excited, people start to pile in. And so we could see some momentum on Palantir continue to pile up. There is 2 catalysts: the S&P 500 inclusion coming in December. If that happens, then Palantir is going to get some benefits if they're announced, and people might buy it in anticipation. And on top of that, the Titan contract, which is $1.5 billion of a contract, that might get people excited as well. And if that gets people excited, then that's another reason why Palantir could perform a little bit higher. Right now, Palantir at this level is pricing in a lot of earnings growth that hasn't happened yet. Eventually it will happen. So when it does happen, we're going to see that momentum, or we're going to see some more growth in the stock. But right now the stock's being priced as if it already happened. And that's a little bit of the scary part when we're thinking of Palantir just from a pure valuation perspective. Michael says people were buying Palantir at $29 for months when it was not yet profitable. No S&P 500, no site, no AIP. I agree. The one thing that I say when people bring up this argument that, oh, well, people were buying it at $30 a year ago when none of these catalysts existed, so right now, why is it today not a perfect buy? The problem is interest rates are high, right? And so let me give the bull bear case here. Interest rates at 5% makes AIP and S&P and GAAP profitability, all of this stuff exciting. But at the end of the day, we are still in a tough macroeconomic environment where it's not that easy to sell something when interest rates are 5.5%. The bull case is that interest rates are coming down. So it's like this perfect storm. You got AIP bootcamp strategy. You got every analyst raising their price target outside of Rishi from RBC at a $5 target. You've got momentum on the U.S. commercial side, growing 33% year over year. You've got GAAP profitability. You've got S&P 500. You've got, honestly, the narrative around AI being so hyper focused for some of these companies like Palantir to really capitalize on the moment. You've got Amazon and Microsoft coming out with Palantir competitors just because they're so excited about what AIP is. You've got Foundry starting to scale because more clients that buy AIP have to buy Foundry. You've got all these new products, mixed reality headsets. You've got a perfect storm, and then you've got interest rates coming down, which theoretically could be 7 to 8 months of a real Goldilocks zone in the market where maybe there is a crash in the back half of 2024 because a recession happens, blah, blah, blah. But until then, stocks could keep going up because money is going to start flowing in. They want to flow in before those rates come down. Oil, now it's $77 a barrel. You got a ton of stuff going on with OPEC trying to figure out how to artificially raise these prices, even though they can't figure it out. There's a lot of momentum on that 2 handle, that Fed target coming into inflation and CPI. And if that does happen, equities will benefit. And that was part of the reason why I bought Tesla yesterday. After the market open, I'll go through my thoughts on buying Tesla because we got about a minute till the market open. But a lot of what I'm talking about right now from a macro perspective is even why at an $800 billion market cap, I thought nibbling a little bit at Tesla, I only bought 5 shares, but nibbling, goal is to get that to 50 shares, wouldn't be the worst thing in the world because I'm starting to see the potential of interest rates really helping some of these companies that have been decimated because of interest rate. Remember, Tesla's trading at 2020 valuations, even though revenue is 3x. And so on top of that, I was speaking to a Tesla bear yesterday, someone who's been bearish on Tesla for the better half of the past 9 months. He saw the Cybertruck yesterday in person, and he was telling me that Cybertruck has turned him into a bull, which is insane. I mean, like literally, he was like, I saw the Cybertruck, I used it, and I cannot imagine anything competing with this product. I am now bullish on Tesla. And he's thinking of buying back in, which is just hilarious, bro. It's insane that a product could be that transformative. And I haven't seen the Cybertruck yet, but they're announcing it tomorrow on Thursday. And my price predictions for the stock is that if the thing is above 80 grand, I don't think the market will like it. But if it's close to that 50, 60 grand range, I think the market's going to be really excited. So we could still see a Tesla dip, but if the market's excited about Cybertruck, there could be a lot of momentum going into the back half of the year for Tesla to gain some excitement as well. All right, folks, here we go. It is time. It is November 29, 2023. Got 2 days left of November. It is 9:30 a.m. Ladies and gentlemen, the stock market is once again open. Wake your ass up. Here we go. Let's see if we can make some money today. Let me check on my options real quick on those BitFi options. Let's see if they, okay, so they're up. They are, wow. Okay, they are up 150%. I'm going to try to close them again. Let me show you guys this time. They are up right now. You guys see this? Here we go. So this is what they're up. They're up $2,000, 220%. I am actually going to try to close them. Right now, they're worth $2.08. I'm going to put an order in for $1.99. 199. Let's do this for 199. Let's see if I order. I have 19 of these contracts. 199. Review. Okay, upgrade to $2 right here. Review, sell. Here we go. Let's see if it closes. We'll put in the order. It's probably not going to close. It might close. It's still at 205. No, it's not. I went to 140. Damn it. Okay. Yeah, that was, well, that's not going to happen. Bay Ray says, Amit thinks he has exit liquidity. Dude, I need my exit liquidity. I need my exit liquidity to get the hell out of these options and make some money. Goodness. Now they're at 140. I'm still up 1,400. I'm gonna put in another order to try to close at 1,400. Oh no, now they're down. Now they're down to 110. Forget it. It's not worth it. All right, that's what happens. One day these options will close live, and you guys will see me make like $4,000. But by then, the theta decay will be so bad, I'll make like $4. All right, let's get into the market open. Palantir, $19.99, falling right below $20, up 1.42%. Coinbase down a little bit after a monster day yesterday, up 7%, now down 1% of the day. GameStop, wow, 20%, $16. Oh boy, I don't know if we're back into the roaring 20s, but it's starting to feel a little bit like 2020. Up 20% on GameStop. We'll get back to that $16.32 right now. Enphase, $100, 101, 102, up 2.94%. Robinhood, 878, up 1.61%. You've got CleanSpark up a little bit, 0.78%. Yesterday had a 15% day. Affirm is up 1.84%. This is the buy now, pay later company. This company is up 87% in a month, which is absolutely incredible. I mean, 87% in a month is not easy for a company like Affirm that was decimated by the capital markets over really over the past couple of years. Affirm went public at $50, ran up to 164, came down to $9. Someone on Twitter tweeted at me yesterday that they're up $63,000 on Affirm, and I quote tweeted it and I asked people if he should sell. And some people were like, yeah, you should take the money. But the reason Affirm is up right now is because, and it's kind of interesting, it's kind of a little scary. The only reason they're really up is because Black Friday numbers were so good and their partnership with Amazon was so amazing that the market is perceiving, they got no new numbers. The market is simply perceiving that because Amazon sold 1,000 items a second, even if 10% of those items were done via buy now, pay later with Affirm, then Affirm's going to make a shit ton of money. And that's not a horrible assumption to have. The question is just if the market's right about that. And, you know, if they are right about that, then Affirm's going to do really well. Truist is up 31.96, up 1.2%, trying to break that $32 barrier on Truist. S&P, 457.66. We are $2 away from the 52-week high of 459.44. So if we can get up $2 more, we are going to see that 52-week high on the S&P 500. Snowflake up 3%. They have earnings today, 176. Snowflake now $58 billion market cap, which is why you're seeing Palantir cross $20, up 2%, because Snowflake cannot be worth $56 billion and the market gives Palantir only a $43 billion market cap. So to me, I think the market's looking at some of these algorithms and starts just allocating capital to a lot of these AI data plays, and Palantir and Snowflake are in the same bucket. I would bet Datadog is up. That is correct. The dog that manages your data up 2.62%. For the day. Meta 338, Meta's down. Amazon 147, Adobe 627, Apple 191. Arc Innovation up 2% on the day. Arc Kathy made a big purchase yesterday. She bought 1,835 shares of Robinhood. So I guess you can say bullish, but that is good for a while. Let me check on SoFi. I see you in the chat. SoFi. Wow. SoFi up 3%. SoFi's up 3%. SoFi's making some money. Okay, let's see. SoFi's up. Sofi's doing real well. Not bad. So I have my SoFi position. I'll show you guys that right now as well, since I didn't show you guys this. This is the position. Okay, this is 185 call debit spreads, 1217 calls for 2016, or sorry, not 2026. And price right now, 74 cents. Average price was 68 cents. Right now, these are up about 10%. So SoFi continuing to perform. Again, you know, we're in a green. Today's green. Today's very good. My portfolio, it was up like $5,000. Now it's up $3,000. The market is green. So we're going to see a lot of stuff continue to be green. The question becomes, if that greenness either stops or if there's more momentum built into allowing that green to happen. SoFi up 3%, and the reason I think the market tone has switched is because all of fintech has really switched. Square, a company that I was not bullish on, goodness gracious, $38 a couple of months ago. Not even a couple months. It was a couple of weeks ago. When was it 38? October 31st. Yeah, literally less than a month ago. $64 today. I was wrong on this one. I mean, I was flat out wrong. I thought Square was shit, and the market's giving it momentum. And I think a lot of this is because of Bitcoin. Obviously, Block, Square has a lot of integration with Bitcoin. But I also think at some level, the mistake I made with Square? It was oversold. And I didn't realize that. I think my thesis on Square is not the worst thesis. Like, I don't like $1 billion in stock-based compensation. I really don't like Jack Dorsey as a leader. And so, maybe my qualitative arguments were not like the best, but the problem is it was oversold. And I don't think I saw that. And I think a lot of companies last month were oversold. And there were certain gems over there that were continuing to to get some momentum. Jay Schwartz says, admit Datadog does not manage your data. Yeah, I know. I was making fun of Bay Ray because he made a joke 3 weeks ago about Datadog is a dog that manages your data. And I wanted to make sure that I said that joke in front of everybody again so that he would be embarrassed. It was not to give you credit, Bay Ray. It was not to make a joke. It was to make fun of your joke that wasn't a joke 3 weeks ago. So I hope you got it. Truist, baby. Regional banks, $32.03. We got those Truist stocks, Truist options up. Truist right now. Yep, there you go. Truist is up. Looking at this portfolio, Truist is doing well. Truist continuing to maintain momentum. Again, interest rates go down. AOIC losses come off their balance sheet. Is good for all banks, particularly good for regional banks. Truist getting some momentum. S&P, look at that, 11 cents away from 458. It is flirting with that 458 level. And Tesla up another 2% today, 251. I'm going to check my Tesla position. I believe I bought lower than 251 on Tesla. I just have a hunch I paid a little lower than what I got. I am up 7% on my Tesla position. Not bad. I'll say in a day, 7% in a day. S&P can barely get you 7% in a year on an average year, 7% in a day. I think turning into not the worst investor. Apple 191, NASDAQ 14,406, Datadog 117, Verizon 3768, Nvidia 486, and Palantir 2006. 2007 right now. Market is up, folks. We are seeing some momentum here, and things are not doing too bad. HIMS is also smashing it. Let's check on HIMS real quick. HIMS, yeah, wow. Congrats to HIMS shareholders. 870. This stock was at like 565. Wow. October 31st seems to be a bottom for a lot of companies. Outside of SoFi, I know SoFi bottomed maybe bottomed like 2 weeks ago. But HIMS was 565. Now it's 872. That's October 31st. How it seemed to be one of those days where things were bottoming out. Let's get a bearish take, though. So here's New Edge Wealth's Ben Emmons. I think we've seen this guy on CNBC a couple of times. Guy looks like a mix between the Joker and Gavin Newsom, who says 2024 will be fuel for gold. Okay, I thought it said fool's gold. I thought he was going to be bearish. Maybe fuel for gold maybe is bullish. So let's see what he has to say. I thought it said fool's gold. I was like, oh, the guy's bearish. We'll see if so let's see what he has to say. It seems like he's going to be all right. And then we'll listen to Bank of America talking about their S&P targets as well.
Market watcher calling for gold to fuel a risk-on rally next year. Ben Emmons, the senior portfolio manager, head of fixed income at New Edge Wealth. Carter, as you heard, is predicting a decline in the S&P 500. But you're saying that gold could actually be telling us that there could be a risk-on rally coming. Why is that?
Yeah, it's an interesting combo, Melissa. Normally you think of gold like a hedge against inflation or uncertainty. And I think both still play. I think that's one reason why gold is up. And to Guy's point, like yields are down, dollars weaker, that's macro story for gold. But it's also a seasonal issue here. So we're in a really strong November month for stocks. It could be a good month for December too, at least that looks like it historically. Gold has an interesting pattern here too. It's actually doing even better than stocks in December.
Okay, so they are being a little bit more bearish for the market. That's what they were saying. Gold is at 2,061 right now. So when I say fuel for gold, I actually thought they were talking about like gold metaphorically, not literal gold. So gold right now, over the past 5 days, up 2%, 1 month, 2%, 6 months, 4%. Year to date, gold is up 11%, which is actually a good year for gold. I mean, usually gold does not do that well per year. Gold was at $1,000 in 2010. It's at $2,000. So gold has doubled in the past 13 years. So it's obviously not been the best performing asset compared to something like a Bitcoin. You guys are telling me to do an Irish accent. I don't know if I could attempt that one. Let's hear from someone else. Let's hear a little bit from Bank of America for why the S&P will continue to rally in 2024, why we're seeing 5,000 on the S&P.
America anticipating next year will be a stock picker's paradise, with the S&P 500 hitting 5,000 by year end next year, not this year. Joining us right now is Savita Subramanian. She is Bank of America Securities Head of U.S. Equity and Quantitative Strategy.
I felt so bad for Becky having to say that name. Like as an Indian, I felt bad. I was like, I don't even say that name, right?
And look, there are a lot of people who are now starting to question that, hey, we've run a long way in November. Maybe we're going to see a pullback on some of these things. You think you're pretty convinced that things are going to go up from here?
I mean, not in a straight line. I think there is a high probability of, pullbacks next year around various areas of concern. But I do think that we're in a healthier market setup than we've been in a very long time. So I'm actually feeling pretty good about the market. I mean, if you think about it, it's not even what the Fed, we're not bullish because of what we think the Fed is going to do.
In terms of, you don't expect any pullbacks in rates?
We don't necessarily have a view that's predicated on a big drop in rates. It's really more about what the Fed's already done, which is, the Fed has done a lot of the painful work already, and chances are it's close to over. The market has handled it so far. Sure, there are lagged effects of monetary policy, but if you look at consumers and corporates, I think whenever we say, when we look at things like delinquencies and worry about the fact that they're rising, they're actually just coming back to more normal levels from pre-COVID lows. So I think that we're in an environment where the U.S. consumer and corporates actually look pretty healthy. Consumer confidence might be a little bit rattled by the fact that rates have...
That's actually a really good point she's making. I want to go back to the markets because we're seeing some momentum here. But what's really interesting here is what she's saying about everyone's like, oh, credit crunch, delinquencies, blah, 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 blah. It's like, dude, that argument makes no sense. Like in 2020, we printed so much money. Obviously, we're going to see some downside from there, just like we lost $1 trillion in bank deposits. Is that because people don't want to put their money in the bank anymore? No, it's because we printed so much money that eventually that money is going to leave the system. And yeah, $1 trillion is going to leave when you print $7 trillion. So I think her argument that the consumer is resilient and this idea that we're having all these credit crunches and delinquencies is going to happen in terms of it's going to rise, but it's not going to be at that astronomical level because we're just getting back to 2020 because we've had 3 years of a lot of artificial liquidity entering into the system. And as a result of that, it's hard to imagine that it's going to be that bad. And I think that's also a reason, tying it back to SoFi, why we're seeing 5% gains. Remember, the bear case for SoFi was recession, delinquencies. SoFi is this unprofitable bank. SoFi goes to shit. If there's not a massive recession, let's say there's a small recession, if there's not massive amounts of delinquencies, by the way, SoFi has, a lot of people that they vet in terms of who they give loans to that are likely not to default, given their credit scores, their jobs, income, etc. Then the market really doesn't have an excuse. Once SoFi becomes profitable, which is going to happen probably in 4 months, the market doesn't have an excuse to give SoFi some of this momentum. And that's why I think we're seeing 5% right now. You guys are talking about PayPal being down. PayPal's up 1%. Not horrible. PayPal was running a little bit more, but now PayPal's down 1%. PayPal went to 6. Oh, wow. So we hit 60-20 today. All right, so we at least hit $60 and then it came back down, but at least it's up 1%. Not bad. Palantir, $20.22, 2% run on Palantir, breaking $20 square, 64.66, up 2%. You got GameStop, look at that, up 10%. GameStop continuing their momentum. Enphase, 3%. Robinhood, 3% as well. Robinhood continuing to get their momentum as well. And Robinhood benefiting from that momentum. Wow, these Robinhood calls are up. These Robinhood calls are up. So you guys know I'm in the $12, $20 calls in Robinhood. They're up 26% today. Wow. These guys are up. And the saddest thing is I wanted to buy more a week ago and I was waiting to pull the trigger, but I just didn't. Like I have a lot, but I wanted to buy more. I guess it's good risk management to not just go that deep. Because look, on a green day, and this is the right time for me to say this, we are euphoric today. Tomorrow, the day after tomorrow, definitely Friday, we could just come back down to levels we were at on Monday. Right? Like a lot of these gains don't have to last for, a while. We could have a nice little pullback before we see the next leg up. S&P continuing to do well, but this is something to always remember. As much as you wish you would have bought more, things can just start to go back down. Things can start to cool off. People can start to take profits. We saw this with Palantir. Saw it at 21. We thought it was going to 25. We thought there was no stopping it. Came right back down to 18 and said, you know what? The market is a pendulum and that pendulum swings back and forth. So we are seeing some nice gains today, but the question is if they are going to last. And that is going to be, what matters. Kaiser says, no, they will last forever. Oh, I wish they would last forever. That would be so nice. What was the other stock I was just about to look at? What was the stock I was just about to look at? I just had it on my head. Was it was it? Oh, T-Doc. Yes, T-Doc. So I talked about T-Doc on Monday. Wow, T-Doc up 5%. Yeah, the reason T-Doc's up 5% as well, and this is, something me and Steve have been talking about. When I talked about it on Monday, I didn't buy, but market cap was 2.8 billion, revenues 2.6 billion, 1.5 billion in debt, 1 billion in cash. Market's giving it literally zero premium on any of their quote unquote moat, which you could argue they do have a moat in the telemedicine space, up 5%. It's companies like that, these small caps that are going to get, if we have a nice rally, S&P still flirting with that 458 level, they're going to go up. Like the market can't keep them artificially down when everything is going up. And so it's gems like those that could double if like other companies are only going up 20, 30% because they're so beaten up. They've gotten such zero of a premium. Same thing with a company like Hims over the past couple of weeks. Obviously, I think same thing with a company like SoFi that's not getting that much of a premium if you just look at their price to book, that they're going to get some market momentum coming in. At least Palantir bottom this time was 19 and not 14. Well, yes, and maybe, right? We still don't know if Palantir bottomed at 19. I think Palantir has to be at this $19, $20 level probably till the end of the year for us to definitively say 19 is starting to form as a bottom. And really until January, February, like we get until the end of February, we're still at 19, $20. I feel way more comfortable saying that 14, 15 is likely not happening again. Right now, 14, 15 is happening. I don't think 11 or 10 is happening, but 14, 15 could happen if, things reverse. It could easily nosedive back down there. But when the market's continuing to run, sentiment is shifting as Timothy says, crazy to see sentiment shift hard for the first time. Yeah, when have we had a sentiment shift like this? I think the last time we had a sentiment shift like this was August of 2023 when we had the S&P at all-time or at 52-week highs. But the problem was that wasn't a real sentiment shift. If you guys remember, the reason that happened was because the Fed said they're pausing. That's it. That was the reason, right? And that pause was a temporary pause because then we got 2 rate hikes right after that. So it's like, it's like you got to pause, which is exciting, but it wasn't a pause that was grounded in anything real. And also inflation was still above 4%. So that rally, I mean, that was a great time to sell, quite frankly. If you looked at macro really well, that was a good time to sell. Not even in hindsight. That was just like, it made no sense for that rally to happen. But now with inflation coming down, with oil coming down, with real sentiment starting to shift, it might be a good time to keep it in and get some more gains before things sell off. Sachin says, given the last year bad performance of stocks, there will be a lot of rotation and profit booking at the end of this year. I agree. I think a lot of people, given they lost out a lot in 2022 and they did not make as much money as they wanted to make and think they lost a lot of money, there is probably going to be some people that are like, you know what, let me get out, let me take some of this money and run, because we don't know how long it's going to last. Robinhood right now, 8 cents away from $9, up 3.24% on the day. Look, Robinhood it was one that made a lot of sense. They tweeted today some meme about them coming to the UK, and that UK expansion also is going to be really good. Crypto trading on Robinhood up 92% year over year. It made sense. It really made sense at $8. I know there was a guy on Twitter who tweeted at me. He bought 37,500 shares of Robinhood at $8. So he spent like 300 grand. He's doing well. He's made some money. So even if he just wanted to swing trade that, let me do the math on that real quick. Even if that was a swing trade, 37.5 times 8. So what is that? So 37.5 times 892. Let's say if he sold right now, he would have made $34,000, which is not too bad. When you're playing with 300K to make 34, that's not too bad. Sachin as well, since we see he's in the chat, he has purchased 20,000 shares of Robinhood, I think around 840, 850. So he is not doing too bad as well on his Robinhood position. DNA is up 6%. Wow, Ginkgo's running. It's a rally when Ginkgo's running because Ginkgo's gotten no love from the market. So Ginkgo's up. PayPal up now 2%, 59.77, trying to crack that $60 range. SoFi, 768. We got to crack 8. We crack 8, things start to get a bit more bullish. We got to get through 8, but up 5% on the day, up, almost 8% on the past 2 days, past week. Not bad for SoFi. SoFi was at 630, like literally a week ago, right? And that's when I bought the options. I mean, that's when I put the 13 grand, 12 grand into the call debit spreads for 2026. Remember, I got rid of all my 2025 options for 2026 when we spiked a little bit at this level 3 weeks ago because I just got really worried about SoFi for 2025. And I'm happy I did that because it's going to help me sleep a lot better in 2024, knowing that I've got another year to let this guy play out. Wow, look at Truist. I didn't even see this. 32.27, up 2.26% of the day. Regionals, again, continue to get love. Tesla, 250. Cybertruck event is going to be tomorrow. Verizon, 37.75. NVIDIA, 486. NASDAQ, 14,409, up almost 1% of the day. 0.89%, up 126. Apple, 191. Adobe, 626. Amazon, 148. Not a bad day for the stock market. Palantir, 2017. Robinhood, 895. Palantir up 2.33% on the day. Let me remind everybody, Dan Ives will be joining the Market Open stream on Friday, which is 2 days from now. He'll be here at 9:45 a.m. unless something messes up with his schedule. From my communication with him, he is confirmed for 9:45. He's going to spend 15 minutes with us, and I'm going to ask him about Palantir. I'm going to ask him about Microsoft. I'm going to ask him about Apple. Ask him about the general bull tech rally he thinks we're in. And we're going to get his thoughts. So he was gracious enough to say yes to that. So make sure you're here Friday, 9:45 a.m. Dan Ives, unless anything happens with his scheduling, should be good to go. And he'll be here. Get Dan to ring the cowbell. That would be fun. That would be awesome to see him do that. So yeah, I mean, look, we're seeing some momentum, and it's really nice seeing this momentum right now. Let's get a little bit more about this idea of a relief rally. So at the beginning of the Market Open stream, I was talking about macro at about 4 minutes and 6 seconds. If you want to go back to that part of the stream, and I was talking about a potential Goldilocks zone we're in, where money's coming in before interest rates get cut, and if it's the next 6 to 8 months, there's a lot of money potentially to be made if we have a rally that comes from that. Let's hear Laura Goodwin, who's an economist, talk a little bit more about this Fed relief rally coming in the next few months.
Our A-list is a Fed.
This video is unavailable. What? The video? Okay, no, it should be back. Wow, the video is private? That's the first time this happened on a Market Open stream. Why did CNBC make the video private? Did they not like her analysis? That was weird. Did not expect that, seeing that happen. All right, well, we'll move on to something else. We will see something a little bit more bearish, a short and shallow recession. Wait, is this, hold on. Oh, no, well, yeah, I guess it's bearish and bullish if it's short and shallow. Let's hear it for a potential recession in 2024 and the thoughts on that. That was weird. They just got rid of the video. Here we go.
The economy is Dana Peterson, the chief economist at the Conference Board. Yesterday, that organization said consumer confidence actually ticked up in November after 3 straight months of declines. Dana, what do you see? Because it's kind of hard to figure out why yields are coming down, why the market's expecting rate cuts when things look pretty good everywhere you look in the economy right now.
Well, yes, we did have a little bit of an uptick in the overall measure, but that was after many, many months of declines, and it's still pretty low compared to what you'd like to see at this point, given the fact that consumers continue to spend. What really pushed the measure over the top was expectations. They ticked upward, but still that measure was below 80, and anything below 80 still signals recession at some point over the next 6 to 12 months.
You saw what the GDP just came in, revised higher for the GDP for the last quarter.
Yes, and that was the third quarter. We're in the fourth quarter now, and certainly in the third quarter, you had some one-offs, some really big concerts and people spending over the summer going on vacation. But now in the fourth quarter, we have student loan debts coming back in terms of repayments. We have the excess savings that consumers had really slowing down. And you also have the fact that credit card use is well above $1 trillion in aggregate, and consumers are facing higher interest rates on that. And all
right, so I'm gonna have to pause her there because Robinhood just broke $9. But the point she's making, she sounds bearish, but her larger argument is that it's going to be a short and shallow recession. I can never get the S and H correct because of some of those issues going on with the consumer. But it's not a broader thing to worry about, given that the macro and that the consumer is still resilient against a lot of the other stuff that is currently going on in the economy. Robinhood, there we go, $9.09. Look at that, 5% higher on Robinhood. All right, folks, let's check out the options. Here we go. Let's do them live with you guys. Let's check out the options. Where are they at? Where are they at? Oh boy, there we go. They're up 36%. We've got some money that's being made, folks. We've got some money being made. Let's fucking go Robinhood. This is what I'm talking about, baby. This is what I'm talking about. We're doing this to make some money. Up 5% on Robinhood. That's not bad. $9.07 right now, up 5% on the day. And again, I think the reason this is happening, it's performing a lot better than some of these other stocks, is because either retail's coming in and they're getting excited, which is really good for Robinhood, or market's getting really excited. And they're like, why is this company trading at cash when it's GAAP profitable and it's like, a really good company? Let me tweet this out right now. Got to put out the Robinhood breaks $9. This is exciting. This is exciting. And the reason it's exciting is because we were seeing this fall below 7, and all of us together collectively were like, most of the chat was kind of just like, yeah, it doesn't feel like it deserves to be that low. It's not bad. Not bad. We're seeing it. What shirt are you wearing Friday? Dan's a big shirt guy. Dark Star, thank you so much for that comment, because I didn't even realize I need to be wearing a good shirt on Friday. There is no way I cannot wear a great shirt. So I know exactly what shirt I'm going to wear. But now with your comment, I'm going to remember to wear a shirt, because there's no way he can come on the live stream and I don't wear a good shirt. There's no way, given his shirt style. $9.10, folks. $9.11. 5.44% on the hood. This is not too bad. We'll get back to that in a second. Square 65, SoFi 765, Palantir 2018 continuing to be up 2% on the day. Bitfarms 146 up 9% on the day. DNA 155, Teladoc up 6% on the day. S&P broke 458. Broke 458. We are now 60 cents away, or what is it? No, a little bit more than $1 away. So a little bit of $1 away from 459.44, $1.20 away from that level of the 52-week high. We are very, very close to it. Let's just see how the market flirts with it and get there. Not the Weejo shirt. Yeah, not the Weejo shirt. Probably shouldn't wear the Weejo shirt. The white and blue shirt, Kelly asked. Maybe that one. I was thinking of the other one that's a little bit more colorful, the red, white, and blue one. The flowery one. That's what I was thinking, the flowery one, because I think that's a little bit more. This is the shirt I probably should have been wearing, but I'm wearing it today, so it's whatever. S&P 458, not bad. Steve Lynn, thank you for the advice. Definitely wear a shirt. Yes, I will wear a shirt. It's really nice for Dan to come on. He's used to being in front of 100,000 people on CNBC, so for him to come on our stream, which to me, like 800 people, 900 people is like insane. Like I literally can't believe it every day. It's just incredible, and it's exciting, and I'd like thrive off of it. I love it. But to him, I know he's like a seasoned vet and all that stuff. So for him to give us the time, it's really exciting, and it means a lot to the stream. It means a lot to the community. So please make sure everyone's there on Friday, because we want to give him a good turnout, and happy that he's there. That's what you're wearing right now. No, I'm talking about the other flowery shirt, the white one. The one I used to wear on Fridays every single day. That was like the big shirt I used to wear. That was the one. Okay, where's Robinhood right now? 909. Oh my gosh. All right. So the question is, Amit, are you going to sell these options? Because you're up on them. And maybe you should sell them. Wow, they're up even more. They're up 52%. I just showed you they were up 36%. They're up 52%. Now, here's the question. Okay. The reason I don't want to sell these is because at $9, Robinhood is still incredibly undervalued, and I have till 2026. If we're going into a bull market, I just don't think at $10, I think I would get a little bit more excited to sell. I don't think at $9 they deserve to necessarily be sold per se. But I'll think about it for the rest of the day, and I'll pontificate over it. But I think this is one you let it run. Like I put in money for this to let it run for a reason. I don't think this is exactly the time to necessarily get rid of it just because it's up 5% on the day. Robinhood again at $9. The market cap $7.86 billion. They have $5 billion in cash, or sorry, $6 billion in cash when you include cash and cash equivalents and cash and cash equivalents. It's not getting any premium, and they're expanding to the UK. They're only getting more GAAP profitable. I use the product every single day. By 2026, I just don't think this stock is stuck at $9. I just don't. And so we've got some time on this guy. I think we let it ride a little bit more, and let the thesis play out. Because I actually have a thesis on Robinhood. It's not just a trade. It's like a legitimate thesis. But the thesis wouldn't be the same if the stock was at like $15. The thesis was the thesis because the valuation made up a good part of the thesis at $8, and then everything else starts compounding from there. And now we got 9 on Robinhood. Hims at 880, Square at 64, SoFi 766, SoFi kind of flat at the 766 level, up 5% of the day. Palantir 2013 coming down a little bit, but it's still up 2%. Coinbase 128. Let's talk about oil for a little bit. Let's talk about oil. Chris had a really good post on his Patreon today on oil, and I wanted to discuss that as well, just a little bit on what's going on with oil, because a part of the reason we're seeing some of the macro go down so well, or sorry, some of the macro lighten up so much for people, is because oil is continuing to come down. I think you guys are noticing it. Let me know in the chat, what are your smallest oil prices that you are seeing? I am seeing oil at $2.99 in New Jersey. And as I'm seeing $2.99 in New Jersey, it's making me think that in the Midwest, you're probably going to see oil at 280, 270, maybe in Texas get to 260, which is going to be really good for oil writ large. This is a good graphic that was on the post today. What can you make from 1 barrel of oil? And you see all of the different elements where oil is required, right? You can make 39 shirts. You can make 65 plastic drinking cups. You can make 500 toothbrushes, 280 miles on a medium-sized car. Oil is obviously incredibly important for the economy. And the oil index on the CPI was up 2% in September, which is why we saw the market react negatively, because oil continued to be at that $90 range. Now oil's at $77. And so the question becomes what we're seeing with oil. This is why many economies rely on a healthy supply of oil to function, especially countries like India, China, South Korea, and Japan that don't have a large reserve of this resource. Even the United States, our strategic oil reserves are starting to come down. Many of these nations are also manufacturing hubs responsible for producing the goods we use every day, which is another reason they use oil. So if they're scaling back production, it's safe to assume the reason could be a slowing demand picture, not just in the US, but globally. So another thing to kind of think of when it comes to oil is that if we're seeing so much production scaled back and we're seeing a lot of the kind of, I would say not chaos, but definitely volatility going on with OPEC, you're seeing some oil demand starting to come down. This was a good article 6 days ago saying that China oil demand growth poising to slow down to around 4% in H1 of 2024. And then on top of that, you've got travel as well. Spirit Airlines reported a $150 million loss between July and September. Some of that travel loss is also due to the fact that they're seeing less demand. Some of it also could just be Spirit Airlines sucks. And that could be also pointing that if we're having less travel demand, we're seeing less oil demand in general. What does this mean for investors? If oil demand is starting to go down, oil prices are going to start to go down. Now, the demand for oil going down writ large going into the next 18 months might not be the best for the economy, right? We might see recessionary forces. That's kind of Bill Ackman's point, that there are some things that are slowing down in the economy. Oil demand could be one of it, which is sort of the data points Chris was pointing out today in his Patreon post. But besides that, oil coming down is great for inflation coming down, right? So let's forget 18 months. Let's think about the next 8 months. Oil coming down from $90 a barrel down to $70 a barrel means the energy index on the CPI report that's going to come out in the next 2 months, even if it doesn't affect this month, we already saw it affecting last month. Natural gas was down 5% month over month, year over year. That's going to continue to come down, which means that 2% target, that's not going to be easy to get. Right now we're at 3.2. It's like when you're losing weight, right? When you're at 170, getting to 150 is easy. Getting to 130 from 150 is harder. Getting to 2% from 3.2 is not going to be the easiest. You need a lot of shit to come down. And housing is one of those things that is going to come down. And oil is one of those things that is going to come down. And if that is the case, we are entering into a disinflationary cycle within the economy. And if that's the case, the stock markets are going to moon. They're going to go up, right? The point of all of this is to say this is another reason for why companies like Robinhood should probably go up, why equities should continue to do well. Where is Robinhood now? 912, baby, on Robinhood. Oh my goodness. We are seeing some momentum here. There we go, baby. Not bad. Not bad at all. Robinhood seeing 912, PayPal 59, S&P 457 fell just below 458, DNA 153, SoFi 767, and Palantir 20. Palantir falling a little bit. So I don't know if we'll see this rally continue to last throughout the rest of the day. I mean, this is super exciting, but we are going to see, if it continues to keep going. We got the writ large counters in the chat. 245 in Houston. We got £4 in the UK. Well, it's the UK. 250 in Texarkana, Texas. I love it, Billy Jack. You said it the way your name sounds, Billy Jack. Texarkana, Texas. 234 in southern states. Already below 260 some places in Texas. In Miami, cheapest I found is 309. Dude, Miami is getting expensive. Miami is like, the tech companies are going to Miami. Miami, you got all the clubs. Miami's like becoming that place where, rent is rivaling New York and Miami. But I think Miami is where like everyone who's young, they want to move to Miami and live there because you got the club life, you got the food, you got the tech company, you got just everything going on in Miami right now. So I would imagine Miami is expensive. 255 Texas, still too high, mid $3 in New York. Yeah, in Jersey, we're seeing 299, which is not too bad in Jersey. I visit oil and gas platforms in the Gulf of Mexico every week. Yeah, I know a couple of other people that work in these oil companies, and demand is not necessarily going down. Robinhood 918. Oh my goodness. Robinhood 6.19% on the day. Let's go, Robinhood. This is so cool to see. And the reason it's cool to see, it's because like, dude, we've analyzed the shit out of this company for a while. It's kind of like a mini Palantir in the context of how much we've analyzed it. Like we've spent some, I mean, I haven't made 2,000 videos on it, but we've talked about it at least once every day for the past month on the Market Open stream. At least, even if it was for 2 minutes, we talked about Robinhood, and we're seeing it. Now, again, Robinhood was stuck at $9 for the majority of the summer. So Robinhood was at this level. That's why when it got down to $8, it was like, all right, now you're fucking with us. But this level is not that crazy. It was stuck at 9 for a good 2 months. It went to 13 in July. So it's not like Robinhood is new to these levels. It's just been a while since we got there. Meta's dumping. Yeah. I mean, look, like, and see, this is, I'm so happy you brought up this comment. This is where we might see a little bit of rotation from big tech into companies like a Robinhood, small caps that are going up. Well, let's see if it's just Meta or if it's big tech. So let's go to Microsoft. Is Microsoft dumping? Yep. Microsoft's red. Okay. We're 2 for 2. Let's see. Google's definitely gonna be red. Okay, I'm going to say Google's red. I'm going to say I'm 3 for 3 because it's up 0.01%. So it'll probably go down as well. So I'm going to say I'm 3 for 3 on Google. What's the other one? Amazon. Yeah, Google's red now. Okay, Amazon. Fuck it. I could have been 4 for 4. Amazon's green. Okay, so Amazon's green. Nvidia's probably green. And Tesla's probably green. So you got 3 of the big 4 or 4 of the big 7. 3 of the big 4. 4 of the big 7 that are down today. Obviously, they've run up a lot. Tesla being a little bit... Tesla actually should be up because Tesla hasn't had the run the other guys have had over the past month, so I would imagine Tesla's up. But maybe there is a little bit of rotation, from some sectors of the market saying, all right, Meta's almost $1 trillion. Robinhood's $8 billion. Maybe there's some more alpha to be gained elsewhere, So we'll see how a lot of this ends up playing out. All right. I think that's it, folks. We went 7 minutes over time today. We got a mooning market. Let's do one last check. Nvidia 483, Amazon 147, Google 138, Microsoft 379, Meta 334, Robinhood 914, S&P 457, and SoFi 763. Palantir falling below 20, but that's all right. Still 1995, up 1.122%. Coinbase flat on the day, but now green. Palantir 1995 for the day. Not bad, folks. Not bad at all. We've got a green market. Oh, I forgot to cover CrowdStrike. Maybe I'll leave that for tomorrow. I'll actually cover them correctly tomorrow. CrowdStrike had a great earnings. Are they up right now? Because I know they were down yesterday after hours. They're up 7%. Yeah, congrats to CrowdStrike. If you own that stock, congratulations to you. That is a A-plus cybersecurity company. It is one of like 5 companies, including Palo Alto Networks, that is a real company in the cybersecurity space. There's definitely AI stuff there. I don't own it, but if you do own it, congrats, because that deserves its win. So we'll cover CrowdStrike and Snowflake tomorrow. Okay, Snowflake's after hours today. I'll probably cover it on Twitter. So let me do a quick shout. We're gonna do word of the day in a second. If you are not following me on Twitter, please, please, please. This is the only ask I have. Follow me on Twitter. Only ask I have. If you're not following on Twitter, follow on Twitter. If you don't have a Twitter, make a Twitter. It takes 2 seconds. You will get so much. Literally, I'm not even saying it just to follow me. You are going to get so much financial information, so much Palantir information, because there's a thriving community on Twitter that it's worth the 5 minutes making an account, even if you check it once every week, to be on Twitter. I really, and it's a platform that supports free speech. So if you care about free speech, that's another reason you should be on that platform, just to support Elon as well. On top of that, Elon Musk will be speaking today at the Deal Book Conference with Andrew Ross Sorkin for the New York Times. They do this conference every end of November, December. And so that conference will be up later today. I'm sure they're going to be asking him about the X acquisition, the rebrand of Twitter, the advertiser boycott. They're probably going to be talking about OpenAI, Sam Altman-Levin. Elon gave $40 million to OpenAI in 2015. So they're probably going to be talking about that. And then they're probably going to be talking about Tesla, SpaceX, Starlink growth. Starlink's been growing like crazy. So there's a lot that's going to be discussed. We'll be covering that tomorrow on the Market Open, along with CrowdStrike and Snowflake's earnings. So a lot to discuss tomorrow. And again, Dan Ives will be here on Friday, 9:45 a.m. Talking Palantir, Microsoft, and all that stuff. Also, let's give a shout out to Chris's Patreon. We covered oil at 1 hour, 13 minutes, and 36 seconds. Your boy got it on the dot in the chapters in the description. So if you wanted to hear me talk about oil and show some of Chris's content on oil, that was at 1 hour, 13 minutes, and 36 seconds. And again, I would also follow Chris's Patreon. It's $5 a month, $10 a month, whatever it is. And the guy does fucking like 50-page theses when I wake up every morning. I have to read. And it helps me get prepared for the Market Open as well. Here is the word of the day. Soy distant.
Soi-disant.
Bruh. She did not just say that. She did not just say that. I said soy distant, and she said...
Soi-disant.
Dude, what? Soi-disant? I didn't even look. I thought it looked like soy distant. No one in their right mind was like soi-disant when they saw that. No one. Don't lie to me. No one thought it was soi-disant. It was soy distant. If anyone thought it was soi-disant, I swear you guys are lying. No one. And I know it says right there soi-disant, but I don't look at that. I'm impatient, so I said soy distant. Okay, what is this word? The soi-disant psychic predicted a financial windfall for her clients. The soi-disant fashionista boasted about her unique sense of style, but her wardrobe consisted of outdated trends. So it means so-called. So it's kind of like someone who's fake, someone who's like a perceived expert at something. Soi-disant.
Soi-disant.
I think I can actually use this word. I can definitely use this word in a lot of situations because I talk to someone every day who's like one of my best friends, and she always tries to act like she's an expert at a lot of things. So I'm just gonna pull out
Soi-disant.
I'm gonna be like, you're acting very
Soi-disant.
And she's not gonna know what it means, but she eventually she'll know that she's not an expert at everything she thinks that she wants to be. All right, that's it. Market opens done. I'll see you guys tomorrow. Finance Junkies will be back 9 p.m. Daily Pouncer episode will be coming out today. And I'll see you guys tomorrow, 8:45 a.m. on the Market Open. Dan Ives will be here Friday. We'll talk about CrowdStrike, Elon's new interview, and Snowflake earnings tomorrow. Please follow on Twitter. On Twitter, I'll be breaking down Snowflake earnings all throughout the day. We are making some money, folks, in this market. This market is coming up. Chris says BS. No such thing as a friend that's a girl. Chris, I cannot disagree with that. Thank you, guys. I'll see you guys tomorrow. Bye-bye.